Tesla shares down 1.6% in today's trade. Ed Ludlow, co-host of Bloomberg Technology at Bloomberg News. Sean O'Kane, EV reporter at Bloomberg News. Thank you both so much. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have roughly 38 minutes remaining in today's session on a Friday the 13th. How do you think it's going to end? Right now, things appear to be positive. That could change as we approach the closing bell. Let's get the latest on the price action. Bill Maloney is at the Macro Squawk Desk. Hi, Bill.
And good afternoon, Doug. U.S. stocks reverse off their opening lows as the banks find a bid. Dow's currently up 74 points, was down 274. S&Ps are higher by 11, and NASDAQ gains 53. The U.S. 10-year yield of 3.5%. Gold is up 23. Oil is climbing, and Bitcoin is trading higher by 2.7%. Among the main 11 S&P sectors, leaders were consumer discretionary and the financials. Industrials, real estate, and utilities were in the red. Leaders to the upside in the Dow, JP Morgan and Travelers. Intel and Disney led to the downside. After those bank earnings, Bank of America rose 2.4%. JP Morgan also gained 2.4%, while Wells Fargo climbed by 3.3%. In other news, Yellen said the Treasury to use extraordinary measures regarding the debt limit and wrapping things up. Tesla cut prices in the U.S. and major European markets in an effort to stimulate demand. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
Thanks, Bill. Enjoy the weekend. And if you have a Bloomberg terminal and you want to get live audio updates on it, the function is SQUA. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, the largest digital currency by market value, we're talking about Bitcoin.
Ooh, what's been going on?
Did you see what's been going on?
Yeah, it's higher.
It's on it is. It's also on track to have its best week since 2021. It's up roughly 12% or so from the last time I checked. Other tokens have also gained, with an index of the 100 biggest coins adding more than 10%. And then shares of some crypto-related companies up even more, with Bitcoin miner Marathon Digital adding more than 60% this week alone.
All right, well, it's time for our weekly crypto segment. Very pleased to have with us Jay Jog, the co-founder of Say Network, joining us via Zoom from San Francisco. Jay, by the way, former lead developer at Robinhood during the GameStop crisis. We've got about $5 million in funding that got that over the summer. It was led by Multicoin Capital with participation from Coinbase Ventures, Delphi Digital, and a few others. Jay, how are you?
I'm doing fantastic. How are you doing today?
We're doing well, thanks. It's good to have you with us. Okay, so for the uninitiated, which I will include myself in, explain what you do at Say Network.
Yeah, so my background, as you mentioned, I worked at Robinhood before this, and I was there when the GameStop crisis happened 2 years ago. And I'm sure you were following along with it. It was not handled very well, largely because there was internally a complete lack of transparency around what was happening, right? So that made me much more of a decentralization maxi. Anything that happens on-chain is inherently trustless, inherently transparent, which is why we started building Say. Say is a new layer 1 blockchain, and you can think of it as the plumbing for decentralized exchanges. So basically what we're doing is we're making it as easy as possible for exchanges to deploy and scale by building on Say. So our mission is to build the best infrastructure for exchanges. And if we succeed, then the decentralized exchange experience will be identical to that of the centralized exchange trading experience.
Hey, so Jay, so hardware, software, I mean, is your whole idea of build it and then let everybody else play with it?
Yeah, so we're just making open source software from Say Labs, and we're letting everyone just play around with it, fork it, do whatever they want to with it.
We ask all of our guests when they come on and talk crypto if they had any exposure to FTX or Three Arrows. Yeah, talk about that a little bit. Have you?
Yeah. So directly, thankfully, we were not affected at all. All of our money was in fiat in a bank account. But it was definitely a crazy time, right? Like everything that happened with Terra, everything that happened with FTX, it's just been incredible that things like this actually happened in the first place. And it's just been extremely negative for the crypto industry overall. But it really does highlight how decentralization and having things happen on-chain are important. Because, I mean, the biggest issue with FTX is it was completely centralized. So you needed to trust one entity to do the right thing. And in FTX's case, it looks like they just did not.
All right, so I'm going to ask a stupid question, but I'm sure there's a lot of folks out there, or maybe it's not a stupid question, but when you talk about first layer 1 blockchain, I mean, we're all learning, to be fair, Jay, as we go. And we've talked about this with people who are very entrenched in the world that, you know, are in the crypto world, that it is the terminology, how it all works, we are learning as we go. So tell us exactly, first layer 1 blockchain is what? How many layers are there? Is this just kind of a beginning layer where everybody can build on it? Just go a little bit deeper for us.
Yeah, so generally speaking, there's 2 layers. There's the layer 1, which you can think of as Ethereum, Solana, basically any of the big blockchains that you know out there. They're a layer 1 blockchain. Then now there's starting to be an emergence of layer 2 blockchains. So this would be things like Arbitrum, Optimism, and these are built on top of an existing layer 1, and their purpose is to help the exchanges scale. So what we're doing is we're building that base layer ourselves, and you can think of it as being similar to Ethereum or Solana.
So who are your competitors out there?
Yeah, so the chains that we're generally compared against are chains like Solana and Aptos, so high-performance chains that are meant for people to be doing different types of activity. A lot of it is tied to decentralized finance.
Can you give us an example of, 5 years from now, how you envision people using the platform, the chain?
5 years from now, if we're successful, then all on-chain trading activity, or at least the majority of it, will happen on Say. And I also think that the future that I envision for the way that finance is going to work is that we're going to have to stop relying on these trusted centralized intermediaries to be involved in every step of the process. So I think long-term, there's going to be more of a shift of the macro environment overall to be more decentralized. And I also think that within crypto specifically, there's very strong network effects to exchanges. So Say is going to start having a larger market share of exchange trading volume in the future as well.
When you talk about intermediaries, you're talking about in the existing, financial infrastructure?
Exactly.
So why would someone choose your level one over somebody else's? More secure? Is it faster? What's the pitch?
Yeah, so the biggest thing is we're creating customized infrastructure for exchanges. So there's this idea of application infrastructure cycles. That idea is basically that initially there's some infrastructure that gets created. This leads to new applications, some of which find product market fit, and then you now need more specialized infrastructure to support these applications. One example of this would be the database industry. Started off with solutions like Oracle. This led to all of the Web 1 and Web 2 applications that we know and love, many of which have found product market fit. And that has now led to solutions like Databricks Warehouse, which is custom made for AI and ML. I think something identical is going to be happening with blockchains. We started off with Ethereum. That led to an explosion of decentralized applications. Now exchanges, stablecoins have found to a degree product market fit. And now we think there's going to be more and more specialized infrastructure for these specific types of applications. And that's why building on top of a general purpose chain doesn't really work, because it's not specialized. Whereas in the case of Say, we've made a bunch of optimizations to make the experience of trading on Say substantially better.
As prices in cryptocurrency as a whole have come down over the last year plus, the so-called crypto winter, I've also seen the decline of 3 Hours Capital and FTX, of course. At the same time, we're not hearing from companies the same way that we were in the last couple of years when the prices were going up, that they're exploring crypto, that they're exploring the blockchain. We're not hearing analysts ask about it on earnings calls in the same way either. Do you think this crypto winter and the very public downfall of FTX has caused permanent damage to the way that people think about crypto?
I think it's absolutely caused short-term damage. I do not think in the slightest that this is going to be long-term negative for crypto overall. If anything, FTX just reinforces that you really need to do things in a decentralized way. So I think long-term, FTX is actually going to be good for crypto. And overall, crypto is extremely cyclic. Like if you look in the past decade, there's always been cycles. When things are in a bull market, when everything is very hype, that's when there's a lot of traditional companies that are exploring launching things related to crypto. And then afterwards, when there's a bull cycle or when there's a bear market, that's when a lot of these companies that haven't launched anything, they might take a step back. But if you just look at the trajectory of crypto overall, it's still just up and to the right. So even though there's these cycles, the overall trend is that crypto is just starting to get more and more adoption moving forward. And I think it's largely for the reasons that I mentioned initially, right? Trustlessness, transparency, permissionlessness. These are really, really powerful things. And I think society overall, like people, once they get it, they just become very strongly tied to these notions. So I think society overall is going to become much more receptive to crypto moving forward as well.
We're talking with Jay Jog, co-founder of Say Network via Zoom from San Francisco. Hey, Jay, we mentioned that you guys did a funding round of $5 million over the summer. I am curious, though, because of FTX and the fallout and the crypto carnage that we saw in 2022, what has been the funding environment for you and your needs, you think, going forward? Or do you feel if you need to reach out, you can do it in this environment, or maybe not?
So in our case, we have a ton of runway still. Like we raised $5 million. This was something we announced in August. So we're not really facing any negative repercussions from that. I think overall, the market is harder to be raising right now than it was a year ago. A lot of firms that weren't necessarily in it for the tech, like a lot of venture capital firms that were just there because they thought they could make a quick buck, those firms have been leaving. So I think it is going to be a little bit harder now to raise than before. But anyone that builds right now, like this is the ideal time to be building because there's no noise. And a lot of the technology that gets created right now, it tends to be extremely mission driven rather than just kind of mercenary folks that are trying to make a quick buck. So if what you're trying to build is mission driven, I think you still won't have any problems raising capital right now.
What's your exit strategy and timeline? You just got about 30 seconds.
I personally don't have an exit strategy. I mean, I'm just having a lot of fun working on Say right now. So I'm going to keep grinding on this for however long I can.
How much more do you think you're going to have to raise?
I mean, we have more than enough money to launch the mainnet. So we're going to be just launching mainnet and seeing how community responds to that later this year.
Can we just quickly, 20 seconds, who you're partnering with or who's reaching out to you and saying we want to work with you? Just quickly.
Yeah, so right now we have over 100 projects that are building on top of Say. Yeah. So these are all different types of exchanges that are building. So that would be the largest set of partners that we're working with right now.
All right. Well, stay in touch and let us know how things are going. Jay Jog, co-founder of Say Network, joining us via Zoom from San Francisco on this Friday. All right, folks, we've got about 28 minutes left in today's trading session. Equities at their best levels of the session. What does it mean? Well, it's up about 0.6% on the NASDAQ, up about 0.25% on the Dow, up 0.3% on the S&P 500.
You're listening to Bloomberg Business Week. Let's get to Washington, D.C. now for check the latest world and national news. Nancy Lyons is in our 991 newsroom. Hey, Nance.
Thanks, Tim. Treasury Secretary Janet Yellen says her department will begin taking what she calls extraordinary measures to avoid breaching the U.S. debt limit. In a letter to congressional leaders, she urged them to boost the ceiling to avert a devastating payments default. White House National Economic Director Brian Deese says this is a serious obligation.
Congress is going to have to deal with the debt limit and do so without conditions, without games, and without putting our economy at risk.
Brian Deese speaking with Bloomberg. House Republican leaders say they'll insist on spending cuts in return for agreeing to boost the debt limit. President Biden has accepted the invitation from House Speaker Kevin McCarthy to give a State of the Union address before a joint session of Congress, February 7th. The two Trump companies found guilty of tax fraud have been sentenced to pay more than $1.6 million. We get more on that from Bloomberg's Jill Schneider.
The small sum, in contrast to federal penalties for corporate crimes, is due to limits under New York state law. Legal experts say the real punishment lies in the potential long-term blowback to the former president's business, going beyond reputational damage to freezing it out of deals, bank loans, and government contracts. The case stems from a scam spanning more than a decade to hide taxable income by compensating executives with unreported perks like luxury cars and private school tuition. Jill Schneider, Bloomberg Radio.
At least 9 people are now known dead following storms and tornadoes that ripped through the Deep South. Dale Brown's home was damaged in East Montgomery, Alabama.
So I looked out and saw that there was roofing in our backyard. There was roofing beside our house. There was roofing in front of our house. All over, messes everywhere.
The storms are also ushering in more colder weather, with many areas expecting a weekend of freezing temperatures. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your business may be eligible to receive a payroll tax refund. This application takes around 8 minutes, 8 minutes or less, to see if your small or medium-sized business may qualify for a refund of up to $26,000 per employee kept on payroll during the pandemic. You can find out more at getrefunds.com. We have about 19 minutes now until the closing bell. The equity market at higher levels after a turnaround in those big banks. That early session weakness was tied to some worrisome outlooks. As an example, JP Morgan Chase gave a disappointing outlook for net interest income, and Wells Fargo set aside a little more than expected for possible bad loans. Bank of America's results were mixed. Trading revenue topped estimates. However, net interest income was lower than forecast. Citigroup reported fixed income revenue beat, and Citi is also seeing total revenue in 2023 above forecast. A little bit of negative news here from Bank of New York Mellon. The company is planning to cut about 3% of its workforce this year. That would be about 1,500 jobs. The aim here is to streamline expenses. Another negative, potentially, Tesla cutting prices in a way to boost demand. Tesla shares down about 1.3% at the moment. We've got the Dow higher by 0.4%, S&P climbing by about the same amount, and the NASDAQ composite ahead 0.7%. I'm Doug Krisner. That's your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
TikTok, everybody. 17 and a half minutes left in today's trading session. Right down to the wire.
Yeah, but we're
Not exactly.
we are kind of right down to the wire. We had 17 minutes left. We're
lot
seeing the
can
S&P
happen.
500. We just heard the numbers from Doug, but they're worth repeating. Up close to half a percentage point. The NASDAQ higher by 0.7%, while the Dow Carol up by 0.4%.
And we see some buying, like a leg up in the last half hour or so, just kind of rolling over a little bit. So let's get to it. Joining us once again, Emily Hill. She's founding partner at Bowersock Capital Partners, $800 million in assets under management. And she joins us once again on the phone from Lawrence, Kansas. Emily, good to have you with us. How's it going?
It's going well. Good to be here.
Sentiment. Is there a clear direction for you when it comes to where the economy is going, where the market should go at this point?
With regard to sentiment, if you're talking about consumer sentiment, we actually got a little bit of an uptick, and we in consumer attitudes and a moderation of inflation expectations. But I think the general consensus on market watchers is that we're in for a rough 2023. And in fact, I was saying just this morning to a client that it's one of the strongest. It's a very strong consensus, one of the stronger ones that I've seen in my career, which always gives one pause.
Doesn't it also, though, I love when everybody's like, it's going to be terrible, because it makes me think, okay, I'm going to be a contrarian. I love it when everybody's like saying it's bad. Is there any of that thinking going on? Because, it's interesting. We had some stories, the UK may be, missing a recession. I think Germany, the same thing. Like all of a sudden, China continues to open up. I know none of this is ever a straight, path up or down, if you will, but it does feel like there are a lot of metrics coming in, raw data, if you will, that is saying maybe it might not be as bad.
Well, I agree with you that it's very interesting. There's some real mixed signs. So that if you look back at 2022, what was one of the sectors that really performed strongly? And it was industrial, right? If we were really going into a recession, that sector would not have performed as well as it did. There's the fact that American consumers are still continuing to spend. And I think one of the key questions here is that clearly the Fed or Chairman Powell thinks that wages are going to have to fall sharply to unstick core services inflation. And, not everyone agrees with that. And if he's wrong, and if, I think he believes, and most of the, the members of the Fed agree or believe that, we're going to that we've done the easy part on inflation, and that now we're getting to the sticky part, and that to unstick it, we're going to really have to see unemployment tick up. And, that could be wrong. I mean, the person who came right before me on this show was arguing that they were going to be late in realizing that inflation isn't that sticky. So I'm sorry to tell you that I tend to actually agree with the consensus, but I ask myself this daily, right? Because when everyone else, when you've got this kind of groupthink, you do have to step back and question it. And I agree with you that there's some positive signs out there.
Well, the S&P 500 is looking at a second week in a row higher, as we've been saying throughout the program today. It's up 2.7% so far this week, Emily.
Testing that 200-day again.
Right, but I know thanks to some notes from our producer, Paul, that you think that we could start to see even another decline in stocks, a leg lower, because when we start to hear from companies, these investors haven't necessarily priced in profit margin cuts.
Yeah, I think we have to remember that, profit margins for U.S. companies are at historic highs. And I do think we're going to see during this reporting season some disappointing earnings because these higher interest rates, the Fed raised interest rates 7 times last year. And those hikes are going to flow through into earnings. And look, I think part of what's happening here is that the Fed, there's so much liquidity in the global economy, and the Fed needs to get that liquidity under control. And every time there's the slightest optimistic sign, or the Fed comes out and says something that the market interprets as dovish, then suddenly we have this loosen, and which is the opposite of what the Fed is trying to accomplish.
I know. I've kind of been saying that throughout.
Yeah, it's happening again now. It's a little bit like a bad relationship where, no matter what you say, the person just isn't hearing it.
We've all been there.
You have to say, what part of no don't you understand? And I'm sure it's very frustrating for the Fed. And I think we may be seeing another one of those. The liquidity is pouring back into the money is pouring back into the market because there are a few positive signs. So I don't know. What do you think about that?
I like the analogy and thinking about it like a relationship, especially when I think about the Fed as sort of an actual person. I'm wondering, Emily, how much lower you think the S&P has to go?
Well, I think we're gonna retest the lows that we saw on late September, early October. And I think there's a school of thought out there that thinks we're going to go lower than that. I mean, certainly Mike Wilson at Morgan Stanley thinks that. I am not that bearish because I agree that there are enough positive signs out there that we don't.
But you like a lot of cash equivalents. That to me says bear.
Well, I like cash equivalents like T-bills because we're seeing, 4 point. I got T-bills at
there's yield. There's real yield, right?
Yeah, there's real yield there, and so I think for the first time, the allocation to bonds in our portfolios, my client portfolios, over the past 3 or 4 years had dropped quite substantially, right? I mean, from 20 to 25% down to 10 to 15% or even lower than that.
Right.
And I think now that bonds are there's an alternative out there. That Tina era is over.
We've been talking a lot about that all of a sudden when you look at the yields, S&P 500 yield versus bonds are certainly competitive with, potentially without as much risk. Emily, thank you. Emily Hill, founding partner at Bowersock Capital Partners, $800 million in assets under management, joining us on the phone from Lawrence, Kansas. We've got almost 10 minutes left, or just a little bit more than 10 minutes left in today's trading session, just coming off our highs when it comes to the equity trade, but a very different turn in sentiment, although it's not like we're off to the races. But nonetheless, we're looking at the S&P 500 up for a second week in a row here.
I like the relationship analogy.
I know, it's interesting.
I've been thinking about it from Peanuts and the football, right, with Charlie Brown.
Right, exactly.
But this is a good way to describe it.
I'm going to pull the football again.
Yep.
I'm going to do it.
I'm going to do it.
I said I was going to do it.
You did it.
All right, you are watching Bloomberg Business Week. It's Friday, TGIF. This is Bloomberg.
It's now 3:53 on Wall Street. I'm Doug Krisner at Bloomberg World Headquarters in New York with a look at some of today's company headlines. Well, we've been talking about four of the big banks that reported fourth quarter results above estimates today, but in some cases, the outlooks are a little concerning. Among them, JPMorgan Chase with a disappointing outlook for net interest income, and Wells Fargo saying earlier it is going to set aside a little more than expected for the possibility of some soured loans. Bank of America's results were mixed. Trading revenue better than expected. However, net interest income was lower than forecast. Citigroup reported fixed income revenue above estimates in the fourth quarter, and Citi sees total revenue for 2023 above forecast of $76 billion. Bank of New York Mellon is planning to cut about 3% of its workforce this year. That's roughly 1,500 jobs. The aim here is to streamline expenses. Many of these reductions, by the way, will target management positions. Tesla is cutting vehicle prices. It's the car maker's latest effort to stoke demand following several quarters of disappointing deliveries. Tesla lowering the cost of the cheapest Model Y by 20%. It also cut as much as $21,000 from the most expensive models in its home market. United Healthcare reported adjusted EPS above estimates. The company saw minimal cost uptick from both the flu and other respiratory viruses in Q4. And Delta Airlines forecasting first quarter profit short of estimates. Those are some of the company headlines we are following today. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody. Happy Friday. Carol Masser, Tim Stenovec, live in our Bloomberg Interactive Broker studio. A couple stories. Doug was touching on a lot of this with the financials. We want to just go back to the financials, talk a little bit more about JP Morgan, B of A, their headcount jumping while that at Wells Fargo actually falling. So different stories for some of these big banks, excuse me.
Yeah, let's talk numbers here. So JP Morgan's headcount rose 2% to 293,723 from 288,000 last quarter, the company said in its earnings release on Friday. This is up 8% from 271,000 just a year earlier. And then, Carol, you mentioned B of A. That headcount jumped to 216,000 in the quarter, topping a year earlier figure of 208,000, and then up from 213,000 from the prior quarter as well.
Wells Fargo, their headcount dropping to 238,698, and that's a drop of more than they were over 249,000. So just throwing some numbers at you and just kind of watching what's going on and what that maybe tells us more broadly about what's going on in the economy. The other thing we wanted to mention, crypto. We watched crypto in terms of what's happening, job cuts. Digital asset exchange Crypto.com reducing its global workforce by about 20%, the latest retrenchment we know in this sector following the collapse and contagion last year.
Yeah, except for this week when we've actually seen, best week for Bitcoin since 2021. Coin. Yeah. I know.
Is the coin doing any hiring?
The coin is not doing any hiring. It's actually really funny. So the company's CEO, Crypto.com, said in a statement on Friday that the difficult decision was made amid a focus on prudent financial management and to position the company for long-term success. Crypto businesses, Carol, have collectively shed more than 1,600 jobs in the first 2 weeks of 2023.
Yeah, sounds like a lot. But I mean, or
just in the first couple of weeks of 2023.
Yeah.
That doesn't take into account what happened last year.
Right.
That is quite a bit.
I'm waiting to see how this all plays out, though, in some of those labor numbers, right? Because we continue to see resiliency from week to week and certainly from month to month, and that will be interesting to see whether it's crypto or finance firms, what's going on. All right. We're getting ready to wrap up the trading week and the trading day. Just got about 3.5 minutes left. Stocks just rolling over, but still a lot of green across the board. Right now, we're going to head over to our TV colleagues, talk about the markets beyond the bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with the smiling Carol Master and a somewhat smiling Tim Senovic. We welcome our audiences across Bloomberg Television, Radio, Quick Take, as well as on YouTube. And yes, we are almost done. And look, Carol, let's face it. I mean, when you came into today, it looked like we were going to have a much different conversation here about what was going on in the market. We're almost at 4,000 even on the S&P 500, higher on the day and on the week.
Yeah, I kind of love it, right? We're talking about, what, 2 weeks in a row for the S&P 500. Kind of interesting. I feel like there's a fair amount of negative sentiment. I like when there's a lot of negative sentiment because I'm the contrarian, and maybe things won't be as bad as everybody's been talking about, Tim.
I was really surprised this morning at 10 o'clock that we didn't see stocks immediately move into the green as a result of the sentiment numbers and the inflation.
Because the banks are making some money? Oh, no.
No, because of the, you know, it's just more good news about the way the consumer is feeling about the economy. I mean, between that and what we saw last week with the jobs numbers, we saw with inflation yesterday.
What's everybody so bummed about, right?
Look, you know, 0.7% increase on the NASDAQ is, you know, composite is nothing to shake a stick at, but I was surprised that we didn't see that as a direct result.
Do you keep sticks in that studio?
I do not.
Okay,
I do not.
I guess it all boils down to the Fed's reaction function and people thinking about what the Fed will do with these figures. But then we got that CPI data yesterday. It's interesting we didn't get more of a reaction on Thursday. That's a trend.
Katie, the Fed's going to do what it's going to do.
That's so true, Carol.
All right, well, we got
T-shirts printed up.
All right, well, we got a busy week coming up next, even though it is going to be a holiday shortened week, at least here in the U.S., but it is going to be busy. This is how this week ends right now. The Dow Jones Industrial Average higher on the day by roughly about 0.3%. We're going to call it right around 34,298 and change here. It's up about 2% on the week. The S&P 500 higher by about 15 points, 16 points. It's going to close just below that 4,000 mark, Katie. I'm sorry, 399.9. No. So I think somebody was listening to you and decided to trade down on you. But the good news is it did close above that 200-day moving average for the first time in more than a month. So definitely an encouraging sign there. And the NASDAQ composite higher by 0.7%. We should point out the NASDAQ is actually on a 6-day run right now. It's been having a phenomenal run here, as has the Russell. The Russell 2000 on a 6-day run as well, up about 0.5–6% on the day. But on a weekly basis, Carol, it's up more than 5%.
Want to guess what's the best performing name in the S&P 500 this week?
It's an airline, I know.
Very nice.
Yes, which one?
United, followed by American.
Okay, there you go.
So there you go.
Did you guys plan this?
No.
You just knew?
You think this is rigged to like the CPI report? No.
We just have a mind meld. That's what's going on, me and Romaine. All right.
Well, in any case, let's look at the industry groups because we have some really definitive.
It is Friday the 13th.
She doesn't buy it. She doesn't buy it.
Let's go. Come on. Let's talk about the retailing industry group. It's up 1.7%. A lot of that is Amazon. A lot of that is Target having a very nice rally today. And of course, we move on to the banks. It's really the story of the day. I would imagine it's going to be the story Tuesday as well. Those big banks coming out and reporting. Shareholders seem to like it. That industry group up 1.6%. Let's go to the bottom of the list. And it's autos. This is interesting. A lot of this was caused by Tesla cutting prices. But what's interesting is that you have Ford, you have GM down even more than Tesla at this point, and that's dragging down the entire sector.
Is that how you say it, Tesla?
Tesla.
It's how Elon Musk says it.
I keep learning.
How do you say it?
Tesla.
Tesla? Like a soft S?
No.
No, it's Tesla. You got it right. All right, let's get to some of the individual gainers. I got to start, with one of the banks because we know we saw quite a turnaround, 180 in the banks today as the trade played out. JP Morgan finishing the day up about 2.5%. We know net interest income was lower or will be lower than analysts expected as the economy shows some signs of slippage. But, bottom line, these banks are still making a lot of money, and investors, I think, had a change of heart initially after the release. So, again, JP Morgan up 2.5%. Amazon, this was a standout in the NASDAQ 100 a little bit earlier today, up almost 3% in today's session. There was a ton of analyst chatter on the stock. Keep in mind, it's up about 16% year to date. It's still down roughly 50% from the July 2021 high, so a little perspective. MKM Partners out and saying that Amazon.com shares have outperformed this year. They say the stock still screens as having the least downside risk among mega cap internet and technology companies. Goldman was also out maintaining its buy. They cut their price target to 145. Oppenheimer out today, cutting its estimates of AWS's revenue for the fourth quarter. But still, again, a lot of these companies still maintaining their upbeat ratings on the stock. stock. And then Hanes Brands, HBI is the ticker, up more than 2%, was up 6% at its highs today. This is after the company said it would report fourth quarter net sales slightly above the top end of its guidance range. This company's up about 29% so far this year, but more than 70% of the float is shorted.
All right, let's talk the decliners here. Tesla is the one that we're starting with. It's down 1% on the day today, cutting prices across its lineup in the U.S. and in major European markets. The concern, of course, is that lower prices will hit margins. You heard Katie say that it hit other companies like GM and Ford even more. Romaine, you mentioned earlier Northrop Grumman, another defense stock that was lower today. Raytheon, we saw defense stocks lower across the board today. This after Goldman Sachs came out and said the defense stocks don't price in the potential for a, quote, renewed focus on U.S. government cumulative debt. I know I said this earlier this week or late last week, but it's still hard to believe that with Republicans in charge, defense stocks, there's a concern about spending when it comes to defense.
Well, we should point out, of course, I mean, the reason why is because, at least based on the reporting that we did, is that one of the deals that Kevin McCarthy had to make was potentially going to eye some cuts in military spending. I do want to point out, too, Tim, we were speaking with David Sowerby over at Ancora just before the close. He actually said he actually likes the defense space, particularly when it comes to General Dynamics, saying that longer term, a lot of the structural issues that would lead to the necessity of some of those names still exists.
All right, well, I don't know if I can call that good news, unfortunately.
Yeah, unfortunately.
Bed Bath & Beyond, though, we got it down 30% today. Romaine, this one's for you. Bed Bath & Beyond still up 200% this week. And guess what? I got no fundamental story for you.
Well, and the moves that we saw, I just on a day-to-day basis here, it was just insane. And we saw the same thing with some of the other meme stocks too, Tim. I think Carvana ended up closing down like 13%, but it's really what happened in between the open and the close. It's probably most interesting.
It almost felt like a Hertz situation. Remember that when Hertz said that, you know, it was heading towards bankruptcy and, you know, traders just seized on that and eventually it was memed out of bankruptcy. I don't know if it's going to be a similar story for Bed Bath & Beyond.
All right, a quick check on yields here because, of course, this is a cross-asset move that we saw on the day. Yields, of course, did move higher here on the day. On a weekly basis, they are lower, but only slightly, but still down for a couple of weeks here as I think the bond market, Carol, really starts to price in not only just the macro conditions, but I think the idea here that the Fed is going to have to do something when we get to that February meeting as far as signaling what comes next, and what comes next maybe nothing.
Yeah, I mean, you're not listening if you don't get it. The Fed is obviously going to probably do something, right? I mean, that was funny. Obviously, probably. I mean, they're going to do something. We know that come that February meeting. I mean, we could debate 25 or 50, but I mean, they've made it very clear, their message, that they're still on this. I guess at this point is what happens after that. Do we get
can
some
I just
kind
play
of clarity?
devil's advocate? I mean,
Sure,
a lot
please.
of the messaging, though, did come before some of the data points that we've gotten, which continue to show that persistent decrease. I think I was talking with you during the previous simulcast about the Michigan numbers, Michigan sentiment numbers, and I think next week, of course, we get PPI. Then you talk about, I think those retail sales numbers are going to really be in focus here because we talk about how resilient that has been, and then we had that big drop in the November numbers, and you wonder if that repeated itself in December.
But does it also just say, wait, the Fed maybe can do that soft landing? Like, this is good that there's some upbeat economic numbers, right?
Yeah.
Well, that's the thing that I've been asking. I mean, if December alone, you had the unemployment rate drop, you also had inflation drop. Does the Fed need to be as aggressive on the labor market if it can achieve that deceleration in inflation without necessarily cracking the jobs market?
We're not there yet. Yeah. That's the problem. 6% inflation is still incredibly high.
Right.
So
6.5%.
6.5%, even incredibly higher,
Thank you, Katie.
Thank you.
You're right.
All right,
So, go ahead, Romaine.
Well, I'm just real quickly for our TV audience. I mean, we're putting the calendar up for you and some of the key data points in the U.S. housing starts, existing home sales, of course, the retail sales number and industrial production. But I also think it's interesting, too, to keep an eye on what's going on overseas. You got a Bank of Japan decision coming up. You have also a lot of economic data coming out of some of the European nations. You got Christine Lagarde over in Davos, and she's scheduled to speak on Thursday. So there's going to be a lot of chatter out there by central bank leaders and other big name economists, at least the type that we would pay attention to. And I wonder if that changes any of the sentiment.
I look at that calendar. The thing I'm looking for the most is what happens with the Bank of Japan, whether they actually do move rates at all. There was so much speculation after that tweak to yield cap curve, or whatever we're going to call it, YCC, that tweak. What does that mean for their policy going forward?
Are you going to call? You want to call that too?
I'm used to typing it, so it's hard to say things out loud.
First policy review of the year. You know, we've been talking with our Kathleen Hayes. I mean, she's over there in Japan. This is important. They are the biggest buyer of U.S. Treasury treasuries. They've been fighting inflation, moving very rapidly to the upside. This is a new story, for them. So what does that mean potentially for global markets, for the U.S. fixed income market, U.S. sovereign? This is something we have to have on our radar.
And don't forget, Big Bank earnings continue on Tuesday with Morgan Stanley, as well as Goldman Sachs. We got Netflix on Thursday. We got Schlumberger, if it's even still called that next week as well.
I believe they call it.
No, they
Lot
changed
to
the
look
name.
forward to.
Yeah.
It's Friday the 13th. All right, guys, have a great long weekend, a safe one. We will see you again. Our cross-platform coverage, our simulcast on radio, TV, YouTube, and on Bloomberg Quick Take. We'll see you again, same time, same place on Tuesday. It looks like the company's chief merchandising officer is quitting, or to retire, excuse me, and that they are searching for a successor. So just a little bit of headlines after the close on this Friday. All right, let's get to it, and let's get to our next guest.
We got a really great guest with us right now, Carol. Very pleased to have be joining us. Executive from Cisco. Very excited about this one.
I have to say, I've been looking forward to it. I've met her. I've been really kind of blown away. And I've got to say that I've talked with several key members of the Cisco team, including CEO Chuck Robbins, Fran Kasudas, who's the Cisco Executive VP and Chief Policy and Purpose Officer. And then there's Liz Santoni. She's another key member of the inner circle at Cisco. She's spent some 25 years at the company, engineering, cloud computing, IoT, and more. She is Executive Vice President and Chief Strategy Officer at Cisco, joining us on Zoom from San Jose, California. Hey, Liz, it is so good to finally catch up with you. How are you?
Hey, Carol, I'm doing wonderful. Thank you. It's wonderful to be here. Thanks for having me on.
We're looking forward to it. It's been another crazy week, crazy day. It's very early on in 2023. First up, let's start macro with you. How would you describe kind of the environment that we're currently working within, how you guys are, the business and kind of the macroeconomic environment?
I would say it's one of the things is from a business standpoint, can't really comment right now. We're in quiet period.
Fair.
But when I think of the macro environment, I'd say convoluted at best. And it depends. It depends on which part of the world that you're in, right? Harder for me to comment more than that without going into our business, which I can do right now.
Well, what can you tell us about different parts of the world? Because what we do, and you can talk about this in the context of, not even outside of Cisco, but just talk to us about what you see as Executive Vice President and CSO. Because if you have just an incredible perch, not just for the U.S., but for the way that companies are thinking about their own spending around the world.
And the trends that really matter right now.
Yeah, happy to do that. And when I think about, looking back at 2022, right, and just talking to so many of our customers every single day, I think I can highlight a few things that if I were to say that I hear more often is you just have to move. You can't stand still, right? But you need to be able to also figure out how do you separate the trends from the hype. So how do you focus on potential monetization opportunities and metrics and make a strategic investment and not just look at the new shiny object that's out there? Because we all have this fear of missing out and we all want to know, what's the next shiny thing and should I invest in that? And I think while it's key to move, you really have to not just look at the next shiny object that's out there, but look at the trends that really matter to your business, to your employees, to your shareholders. The other one that I see and hear it being talked more often is around how AI assisted is really becoming mainstream, right? It's like what cloud was maybe in like the 2008, 2009, 2010 timeframe. If you think about AI, it gives you a starting point on everything creative that you do, from documents that we can build to presentations, to art, to coding, processes, etc. So that's something that I see a lot of focus on. And then the third one, which is near and dear to my heart, especially from running the applications business out here as well, is the view that it's not just the buying centers. You got to pay close attention to users because users are defining buying behaviors. Right. And that will not just influence, but it'll define how things are bought as well, right? And that goes into some of the things that we talked about as trends, especially around the experience economy and how that, the focus on experience economy solutions will deliver everything from actionable business insights and performance as well.
Hey,
right?
Liz. Liz,
Sure.
I just want to jump in because you used the term, you need to focus on things that aren't necessarily the shiny object. Carol and I spent a lot of time this week talking about ChatGPT and Microsoft's investment in ChatGPT. Is AI a shiny object? Is ChatGPT a shiny object?
I would say AI is definitely not a shiny object, right? I mean, AI is used in so many ways that we don't even know in our daily lives. In our portfolio here, AI is used extensively in collaboration, in security, in applications. But I think, when you think about everything that you call generative AI, of which ChatGPT and OpenAI is one part of it, I think got to look at, what's the potential use cases, what's the monetization opportunity and metrics. And there's a third part of it that we're looking at is around how do you go in with AI, looking at it more from an ethical and a responsible AI standpoint as well. And those are the things that we want to learn more, but also, as we look at our developers, that the idea of how you responsibly use AI is something that we're training our teams on. How you collect the data, how you store the data. Do you know what insights that the model that you're building is delivering? And is that the intent of what you expected to begin with as well? And not just training the developers, but making sure that end users know how their data is being used. And so I think there's so many aspects of it. And as with every technology that's out there, we're going to look at making those strategic investments that line up to knowing that we can monetize it, and there are specific metrics for it. So
Hey, Liz,
as with everything with ChatGPT, we'll go into it eyes wide open.
Liz, let me jump in for a second too, because strategy, and I think about where you guys are focusing your efforts, and there is so much that continues to be thrown at us, at kind of where the world is going. And I'm throwing out metaverse just because it feels like it was such a part of the narrative last year, and we're still trying to figure it out. But you're talking about AI, and you're right, ChatGPT, that was like a big thing this week for us. When you think about, and I think about our audience, the investing audience, what is it that you think that they need to keep an eye on? Be specific too, in terms of you understand this, you have a front row seat in terms of, I know security is a big issue, but that doesn't sound as interesting as the shiny new thing, but it's a real thing. What are the 2 or 3 areas that you think investors, you got to be watching? This is where companies are spending money, and this is going to be, more of our world going forward.
I think if you look at the base facts of it, Carol, is that companies are continuing to spend money in how applications, connectivity, and security are delivered and consumed as well, right? So then there's the sustainability part of it, where if you look at investments being made, technology will need to be sustainable by default and will require new technologies that are built with new processes and in service to these new business models as well. And then there is enablers of these things, right, of these business models, of which connectivity is one, security is the other one, AI is an enabling technology as well. And I think as with everything, I find that one of the tough parts of my job is how to separate out the hype from, kind of what will be like real trends that we can advise our customers on.
Well, come over to our side, because we have to deal. That's the same thing as for journalists. It's like, okay, so what is it? We only have about a minute left. We promise we will get you back more, but I do want to ask you, what's effective in cultivating the next generation of STEM workers and leaders? Because you've done it, but it's been a long journey. I just got about a minute.
Yeah, I would say is making opportunities that are available. And doing it in a way that you take, whether it's unconscious bias or conscious bias, out of it, and being open about it, right? When there's opportunities that are available to everyone and it's transparent on what those opportunities are, how people will be chosen for it, why did they not get a role? And I think when you have that and a mindset coming in that diverse perspectives, diverse experiences really help drive profitability of the business. When you have that mindset, you look at it from the standpoint of it's a business need.
Yeah, it makes so much sense, right? Liz, we got to run. Have a great weekend, but come back soon. Liz Santoni, she's Chief Strategy Officer, Executive VP over at Cisco, joining us via Zoom from San Jose, California. Something to think about. Her career journey, and she and I talked about it. Yeah,
it's incredible.
and in a world so dominated by men, but we'll get her back and we'll talk a little bit more about that. You're listening and watching Bloomberg Business Week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, the equity market ended the day on a high note following a turnaround of the big banks. We did see some early session weakness tied to some worrisome outlooks. As one example, J.P. Morgan Chase, the largest U.S. bank, gave a disappointing forecast for net interest income. Nonetheless, Morgan shares today were higher by, let me bring it up, JPM on the Bloomberg terminal, by 2.5%, and that helped to lead the S&P Financials Index to a gain of around 0.7%. The Dow Industrial Average was up by 0.3%, S&P 500 higher by 0.4%. The Nasdaq Composite, meantime, better by around 0.7%. Tesla is cutting vehicle prices. The car maker is really trying to stoke demand following several quarters of disappointing deliveries. As one example, Tesla lowered the cost of the cheapest Model Y by 20%. The stock today down about 0.9%. And we had word of a pickup in U.S. consumer confidence. Perhaps more importantly, consumer expectations when it comes to inflation dropping in early January to the lowest level in nearly 2 years. We're seeing a move up in yield across the curve today, a 10-year at 3.49 with a gain of around 5 basis points. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. So by one estimate, the global electric motor market size was valued at more than $106 billion. That was in 2020. It's expected, Tim, to reach double to more than $207 billion by 2030.
Well, the question is why? The electric motor market is growing due to an increase in demand for superior machine control when it comes to automotive cars, which is fueled by the high efficiency of AC synchronous motors.
We're getting technical. We're doing a lot of engineering today, I feel like.
It runs in your blood.
It does. Let's get more. We've got Brian Casey, CEO at ECM, a Needham, Massachusetts-based startup. He joins us via Zoom from there. Brian, good to have you here on Bloomberg Business Week. Tell us about your company a little bit more.
Thanks so much, guys. Thanks, Carol. Thanks, Tim, for having us. Happy Friday.
Yes.
So the company is a software and technology company, and our software allows our clients and customers to print electric motors, in essence, print stators, and reduce the weight by a factor of like anywhere from 5 to 10x.
Brian, for the non-technical audience, explain
sure.
how you can print that, the inputs and the output there. I mean, I've seen 3D printing in action, but tell us how this works.
So printed, I think the best part about the business, or the part that's most disruptive, is that we're taking advantage of existing proven manufacturing capabilities in printed circuit boards that are ubiquitous throughout the world. So our software takes discrete inputs, like you were talking about electric motors, and how much torque do you need, how much power do you need, how much rotation speed do you need. Our software takes all those data points and converts that into a design for an electric stator that's used in these axial flux machines, and then that stator can be printed anywhere in the world. So in essence, we're allowing our clients to become their own motor OEMs.
Right. So that's interesting. So any kind of electric motor?
Yeah, our topology acts and behaves like a brushless DC motor. The classification is called an axial flux air core machine, and long story short, it means we have superior torque and more power in a much smaller footprint. So we have wide applicability. Everything we've done projects, everything from sporting fishing reels and haptics to missile guidance systems for the military, up to including large air movement motors for HVAC companies.
Yeah, so talk about sort of the range of what you can create and the size and how it really runs the gamut.
Sure, thank you. So I think that's, again, the power of software, right? That's really the kind of aha awakening moment is, as we've engaged with clients, it's made us kind of stretch the abilities of the software, and put all those, what I would call end-use applications into the software and address what I would call different kinds of applications. So we've built everything from the size of a quarter, which is only a few watts, to something that's probably the size of a large pizza that's up to 20, 30 horsepower. So it's a pretty wide range. And I know you guys had opened up with some of the macro level metrics on electric motors, and as a result of what I would call automation, electrification. And the majority of those motors that we see out in the marketplace are 1 horsepower or lower. But we are applicable in larger motors as well.
So, the notes that you shared with our producer, that this is akin to what in terms of, this is like the chip boom of the 90s? This is how you see it?
Yeah, great question. Similar to how Intel is to the computer industry, we're not a motor company, but our software allows people to put a special kind of chip in the motor, really kind of where all the energy is happening within the motor, which is the stator environment. So our software allows users to really hone in their design and grab some superior efficiency and performance for their applications.
So
And
talk.
Yeah,
So,
go ahead.
forgive me. So talk about the trajectory. So who are you working with, testing it out with? Right, because if your platform, I'm assuming others want to work and kind of go off and create their motors. So give us an idea of where you are in that process.
Yeah, so just give a couple of anecdotal stories. Like we had a company called Noto Film. They make almost what are called drive-by-wire, fly-by-wire for cinematographers that basically allows them to control the camera. And they needed something that was had superior motion and superior pointing characteristics. And they were able to integrate that into their new product, what they call Max Wheel. And they were able to turn that around in just a few months. So that's one client on one end. And then we have large military clients that are using using the software to create motors for unmanned underwater vehicles, gimbal guidance systems, propulsion systems. And we have some clients that are using it for robotics and integration within robotics.
But I mean, are EV cars, are they going to come to you potentially? Or you hope?
Yeah, actually, that's a great question. I think there's a lot of money and people have thrown a lot of design money at the EV market. Our technology is applicable and could be applicable, but you have people like Yasa Motors and Switch Reluctance people that put in hundreds of millions of dollars. So honestly, I think it would be a distraction because we're having so much success and kind of traction with all of our customers now. I mean, if someone came to us and said like, "Hey, we want to use this technology for primary EV," we'd have to probably spin that out or spin some resources out to dedicate that technology towards that application. But we are doing e-mobility for electric scooters, electric motorcycles, what I would call smaller class e-mobility.
A big part of this conversation has to do with how these motors are powered. And Carol and I have talked a lot about battery technology, and we certainly know that these EV companies that are actually building EVs are increasingly trying to sort of have the battery advantage. How do you think about the way that these things are powered and different materials that could end up going into batteries versus where we are today?
Yeah, I mean the battery battle, no pun intended, is ongoing, and how we contribute to that or kind of support that is our technology allows the designers or the innovators to dial in exactly the power and the torque that they need for an application. So there's no waste. One of what I would call handcuffs that users and engineers have is they're confined with industry standards, and they'll purchase a motor or design an application around a catalog of motors. Our software kind of breaks that paradigm and gives the engineers and innovators an infinite amount of choices so they can dial in exactly what they need. And then ultimately that leads to overall system efficiency and longer battery life. So, we'll contribute to the battery dilemma by improving overall system efficiency.
Just got about a minute or so left here, Brian. How much has your business grown in the last, I don't know, what's the right time frame? Because I'm not quite sure in terms of your development, but in the last year or so, or in the last 6 months?
Carol, yeah, we've grown, we've doubled year over year the last 3 years, and we're expecting the same, if not better, for this year. So I think when we call ourselves a startup, we're like the 11-year-old kid at the kids' table at the holiday dinners.
We can all relate to that.
I still sit at the kids' table.
The kids' table is always the most fun, to be quite honest.
It's always the most fun. But I mean, startup is like, we're flying below the radar against, some of the big motor OEMs and other big companies out there. But, we have a lot of tigers by the tail, and it's fun. It's really fun.
When do you get to be the size of one of those competitors who sits at the adult table?
It's really adoption and evangelization, and we're starting to see, I would say, more inbound overtures. I mean, just last week we had 2 motor OEMs visit us from India. We had a group from Japan 2 weeks ago, and now we have some European people. So, and that's really, I think, what was even eye-opening to myself is that what software allows you to do, or a SaaS platform, allows someone in Taiwan or someone in Paris to
Right.
have access to the same technology. And
Well-
that's pretty compelling.
We were talking about it earlier when it comes to the blockchain. That's exactly what we're talking about. Brian Casey, thank you so much. Chief Executive Officer of ECM, joining us via Zoom from Needham, Massachusetts, right here on Bloomberg Business Week.
Well, let's go to Washington, D.C. now for an update on world and national news with Nancy Lyons in our 99.1 newsroom. Hey, Nance.
Thanks, Tim. The two Trump companies found guilty of tax fraud last month have been sentenced to pay more than $1.6 million. That is the maximum fine allowed under New York state law, and it's a far cry from federal penalties for corporate crimes. Manhattan DA Alvin Bragg says harsher penalties need to be put in place.
We're calling for the law to change so that this type of a fraud will be acknowledged by the law and that there'll be a real deterrent by monetary penalty. So we're calling for that, and we'll be working with our partners in Albany.
Manhattan DA Alvin Bragg, the former president, still faces a $250 million civil fraud suit from New York Attorney General Letitia James. The U.S. deficit is nearly half of what it was a year ago. The federal budget deficit in 2022 sat at $1.4 trillion compared to $2.6 trillion the year before. The Treasury Department attributes that to the economy reopening after COVID lockdowns. A deadly storm system spawned tornadoes all across parts of the U.S. South overnight, killing at least 9 people and causing substantial damage. Ricky Adams is head of field operations for the Alabama Emergency Management Agency.
The governor has already committed to doing a declaration of emergency, and also we've gotten commitments from Washington to get the support that we need.
Actually, that was Selma Mayor James Perkins. The NFL Super Wildcard Weekend gets underway tomorrow. Saturday's playoff action will see the Seattle Seahawks face the San Francisco 49ers, and the Los Angeles Chargers will be battling the Jacksonville Jaguars. Sunday, we'll see a triple header, followed by the first round action wrapping up on Monday, with the Dallas Cowboys taking on Tom Brady and the Tampa Bay Buccaneers. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to see if your small or medium-sized business could be missing out on an opportunity. Was your business impacted by COVID-19 in either 2020 or 2021? Well, it may qualify for the employee retention credit. The professionals at Innovation Refunds can help your business recover from the pandemic. See how much could be waiting for your business at getrefunds.com. The equity market finished at the highest level in a month today after data showed a drop in consumer inflation expectations, and at the same time from the University of Michigan, an uptick in the level of consumer sentiment. We're now at a 9-month high, and then on top of that, a major turnaround after some early losses for the big banks following some worrisome outlooks. On that list, JP Morgan with a disappointing outlook for net interest margin, and then Wells Fargo setting aside more than had been expected for possible bad loans. But today, the S&P Financials Index up 0.7%, and that helped to send the S&P to a gain of around 0.4%. Dow higher by 0.3%. NASDAQ comp rises 0.7%. Should point out Tesla's shares were down about 0.9% after the company cut vehicle prices as a way of boosting demand. And yields higher across the curve. A 10-year Treasury last quoted at 3.49 with a gain of more than 5 basis points on the day. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. So we had a Bloomberg story last week. It talked about how the $6.5 trillion U.S. ETF industry boomed last year, but the fanfare revealed a major flaw in the space, the lack of women helming the funds. Enter Emerge. It's a Toronto-based independent fund manager with an affiliate in Buffalo, New York. This firm striving to improve those figures with one of the first all-women exchange-traded fund investment teams in the United States.
We've got two members of the Emerge team with us right now. We welcome Lisa Langley, CEO and founder of Emerge Capital Management, and Kate Faddis, Senior Portfolio Manager at Fernwood Investment Management. It's an Emerge Empower sub-advisor. Both join us on the phone. Lisa's in Buffalo and Kate is in Boston. Lisa, I want to start with you. Just bring us an idea of how this all came together.
Good afternoon, Tim and Carol. Thank you so much for having us on. We have been working on Empower and trying to raise the profile of women portfolio managers for several years. We needed to do it in an impactful way to send a big message to the industry. So on September 8th and 9th, with 4 talented sub-advisors and 5 ETFs, we launched 5 in the U.S. and 5 in Canada over the span of 2 days. And it was very exciting. And that's really what we want to do, send a message that this is possible, that women deserve the attention. And these are all senior, talented managers.
So Lisa, I think I know Well, and I think I know the answer, but I'm going to ask anyway, because maybe I don't. Is this, as you said, you want to send a message. Is it also important, though, getting assets in and getting some traction here and then performance as a result?
100%, Carol. We have to show that we can earn our place at the table. We're not asking for charity because we happen to be women portfolio managers. We just want to have a shot. We just want to earn our place. The biggest issue in the industry is that there's a lack of disclosure. You know, all the evidence and the numbers that tell you, okay, only 11% are women portfolio managers, or 2% of strategies, or 5% of assets, it all comes from self-reported numbers in institutional databases. It's crazy.
Yeah, transparency. We talk about this just generally in terms of ESG and understanding what that means. But you're right. The transparency within all of this is highly lacking. Kate, come on in. This story by Peyton Forte of Bloomberg News definitely caught our attention. Come on in, though. You're a sub-advisor to Empower. Tell us about, your interest and your wanting to be involved in this.
Well, I love the investment business. I love managing money, and for me, this is an amazing opportunity. And Lisa, I felt very fortunate to be included, and I said, why not? Let's do it.
What has been the reception so far as you're out there, Kate?
I think it's been overwhelmingly positive. People will snarkily say, I don't care about male, female, I just care about performance. We know that's not really true. So,
really? Wait, tell us a little bit about that, because Carol and I run into this all the time when we talk about how companies do. And hey, we're just getting started when it comes to earnings season right now, and we see stocks get punished if they miss on the top line or on the bottom lines. So we know that people really care about performance, but what data do you have to show that they care also about the other fundamentals?
Right. I mean, I think people are saying they don't care about the other fundamentals, but I think they actually do. So you'll hear comments like, oh, well, this is just about identity politics. And then I say, identity politics has been happening for 100 years. We haven't had a woman in the White House, not because, or a Jew or anything else, not because no one was qualified. So these things are important. And when you call it out and put a highlight on it, you're not asking for a handout. You're just saying there's maybe a different reason that women haven't gotten these positions. It's not because we're not qualified.
No, Lisa, listen, you're preaching to the choir. Totally agree. And, Lisa, we want to bring you back into this. I mean, Tim and I and many here at Bloomberg have spent years talking about the McKinsey studies, the other studies about the importance of diversity in boardrooms or just generally at companies and how that improves financial performance. And so I just I'm like, I don't get it. It's out there. Why aren't we seeing more diversity, more women involved, but just more diversity in general when it comes to running investment teams? So, lay it out for us in terms of why. I understand you wanting to send a message, but why it's taken so long for more of this to happen?
Because no one's being called out on not reporting on diversity, because there isn't any regulatory or legally compulsory requirement to disclose who's running money under the hood. We have the name of a team. To what you were just saying, Tim, we can track performance 6 ways to Sunday. We know all the widgets under the hood inside of a fund, but we really don't get after who that team is, and it's not required. It's only self-reported into institutional databases. According to eVestment, only 19% of firms are reporting that information, and they're the smallest firms that represent less than 8% of the assets of the 37 trillion that are reported on investment.
Lisa, it's a tough time.
We need firms to report.
Lisa, it's a tough time to sort of have a new fund, to be launching funds. How are you looking at the environment right now?
I think the environment, you have to come out in the ashes. I've launched new things before, when the towers, fell, 9/11, and I believe that, one, to get attention, and two, to really have a value proposition. And it's so competitive, as you know. You were talking, Carol, about the growth of the industry.
Yeah.
It's fast-paced. There's a lot going on here, right? A global compound annual growth rate of 27% on ETFs. So we said, okay, we're going to come out with all women managers, all experienced senior managers, over 20 years of experience, all actively managed, doing fundamental bottom-up, all concentrated portfolios, and a heavy-duty sustainability overlay that's run by the Emerge team. We did a lot of groundwork and research, and institutions and broker-dealers told us that's what they wanted. So we're really just trying to round the wagons and collect on all these promises that they'd be there to support us.
Hey, basic question, and just got about a minute left here. And Kate, let me just bring you back just quickly. I mean, what kind of money are we seeing coming into the ETFs? I know it's early on, but what kind of flows are coming in?
That's really a question for Lisa.
Oh, okay. Forgive me. Lisa, come on back.
No. I mean, we're early into it. We launched in September, very rough market, as you know, from then to the end of the year. We're probably, to be quite honest, flows are in the 3 million range, so certainly not, we haven't hit our goal. But I believe that all the conversations that we have and all the institutions that said they would support us, I believe they most definitely will. It's too important. All of these managers have long track records. So, they earn their place at the table, and we'd love to tell more at emergecm.com.
Right.
Or send us an email, support@emergecm.com.
All right. Well, good to check in with you.
I will say all but one are outperforming the S&P 500 since they launched.
All right. Well, good to hear that. Lisa Langley, Chief Executive Officer and founder of Emerge Capital Management, and Kate Faddis, Senior Portfolio Manager at Fernwood Investment Management.
It is now 4:53 on Wall Street. I'm Doug Krisner of Bloomberg World Headquarters in New York with a look at some of today's company headlines. We'll begin with the four big banks, those that reported fourth quarter results today. The numbers for Q4 above estimates, but there were some troubling signs when you look at the outlooks. One example, JP Morgan Chase with a disappointing outlook for net interest income. And then on top of that, Wells Fargo setting aside more than was expected for the possibility of those soured loans. Bank of America with mixed results, trading revenue better than expected. However, net interest income was disappointing. Citigroup reported fixed income revenue above forecast, and the bank is also looking at total revenue for this year, that would be 2023, above forecast of $76 billion. Bank of New York Mellon is planning to cut about 3% of its workforce this year. That would equate to around 1,500 jobs. The aim here is to reduce and streamline expenses. Many of these reductions will target management positions. Tesla is reducing vehicle prices. It's the car maker's latest plan to stoke demand following several quarters of disappointing deliveries. Tesla also lowering the cost of the cheapest Model Y by 20%. Shares were down 0.9% today. United Health reporting adjusted EPS above estimates. The company saw minimal cost uptick from the flu and other respiratory viruses in Q4. And Delta Airlines forecast for Q1 profit missed estimates. And those are some of the company headlines we're following.
All right, Doug.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Carol Masser, along with Tim Stenevec this afternoon. That's me, by the way. Let's get a check on the latest world and national news. We're going to go to Nancy Lyons in the 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Treasury Secretary Janet Yellen says her department will begin taking extraordinary steps to avoid breaching the U.S. debt limit starting January 19th. In a letter to Congress, she says it's unlikely cash and extraordinary measures would be exhausted before early June. White House National Economic Director Brian Deese says it should not get to that point.
This is very simple. This is not about new spending. This is not about new investment. This is about the United States government honoring the obligations that prior Congresses have already made. It's a sacred obligation, the full faith and credit of the United States.
White House National Economic Director Brian Deese spoke with Bloomberg. House Republican leaders say they will insist on spending cuts in return for agreeing to boost the debt limit. The FAA is out with preliminary findings on that computer failure that prompted half of all U.S. flight departures to be delayed this week. The agency says it was caused when a data file was damaged as a result of someone failing to follow government procedures. According to the FAA, that unspecified person was responsible for corrupting the file. Transportation Secretary Pete Buttigieg is seeing his political fortunes take a hit after the string of travel meltdowns.
This week's FAA system outage and nationwide ground stop came just weeks after Buttigieg faced questions over his handling of the holiday meltdown for Southwest Airlines. Republican Senator Tom Cotton has seized on both these issues, tweeting that Buttigieg couldn't organize a one-car funeral. But Democratic strategists say Buttigieg has helped himself in recent days by making appearances on cable news to explain what's going on. In Washington, I'm Nathan Hager, Bloomberg Radio.
A massive lottery jackpot could be won later tonight. The Mega Millions drawing is worth $1.35 billion. The cash option sits at just over $700 million. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
All right, Nancy Lyons, thank you so much. Did you buy your Mega Millions?
I have not, but each time I forget to buy it, nobody wins. So I guess we're okay. So I'll buy one, and then someone will win, and it won't be me.
All right, let's head on over to the host of Sound On, Joe Matthew. His show coming your way in just a few minutes. Good thing nothing's going on.
It's been quite a week, hasn't it?
Yes.
You get to the end of a week like this, and I said, guys, we really need to zoom out, I think, here. There's, the president's on his way to Delaware. Everyone's going to be safe and fine. But we need to kind of unpack everything that's happened. I'm wondering if, don't you think late tonight he goes in the garage?
It's like, what was I thinking?
What was I thinking?
It's just to sit in the car. God, if I didn't. But of course, we still don't know a lot about that. We have a really interesting conversation with Don Ayer, former Deputy Attorney General, who sits